If you're like most people, you probably feel like you're paying a lot of money in federal income tax. What we're going to talk about today is that we're actually in a historically low period of federal income tax rates. I'm going to show you that today, and we're going to talk about the implications that has for you and your tax plan on today's part 4 of this Income Tax Bootcamp. An interesting area of what I do is overcoming the emotion that comes with income tax and income tax rates. Most people, no matter the environment, feel two things at the same time. That income tax rates are high, that they're paying a lot of tax, and that taxes are going to go up. And one of those I actually believe to be true. I think tax rates will go up in the future. In fact, January 1st, 2026, the law in the books right now says they're going up. Personal federal income tax rates are going up on January 1st, 2026. But it's those emotions that I have to somewhat overcome when I'm doing, advanced multi-generational tax planning for small business owners, for individuals, or people just want some answers to questions. And that's what I want to talk about today is where are we at in actuality when it comes to our current tax environment? And the answer, spoiler alert, too long didn't watch, is we're in a low era of tax rates and really have been since the mid-'80s. Income tax rates have been really low. From an economist's mindset, unsustainably low. From a politician's mindset, gold is going to come forever, let's keep digging. Low. The politicians will never want to raise taxes more than they ever would have to on one party and never on the other party. And that party switches, by the way. As long as we're talking about history a little bit today, the higher tax party or the lower tax party shifts throughout history. Right now, it's on one side and the other, but it will shift. Anyway, that aside, the reason this is important to understand, and what we're going to get into here on the screen here in a little bit, is your feelings about the current situation in taxes and the future situation in taxes generates your actions on what you do when it comes to your tax planning. Now, in the podcast episode that I just recorded, I talked about how contributions to retirement accounts are really the only long-term tax planning that most people do, and they don't even realize it's really tax planning, which, by the way, our companion Income Tax Bootcamp on our Death and Taxes podcast is going on. I highly suggest you listen to that as well. It can be Death and Taxes, name of the podcast, can be found wherever you get your podcasts. If you want to find me other places, I'm all over the place. I'm on TikTok at Ayers Rock Planning, Twitter at Ayers Rock Plans. My website's ayersrockplanning.com, Instagram, Ayers Rock Planning. I think that covers them all. But the point is here that your emotions, just like any other area of life, your emotions create your actions. And your actions, of course, create your future. So let's create the tax-less future that you can have. Without further ado, let's jump over the screen and I'll get you some of these marginal tax rates here, and we'll look here. So here we are. You can see top marginal income tax rates. That should have an S on it. I created this chart, so all typos are mine. All errors are mine. And again, this chart, is just to entertain you through income tax rates. But this illustrates from 2013 through 2026. The reason I had to create this chart on my own is because a lot of financial institutions that release these charts, they cut off in 2011 or 2018. And I wanted to go as long as I had the data. And according to the rules in the books, we have the data for what income tax rates will be all the way through January 1st, 2026. So I included them. Congress could always act and change the little tail end of this graph here. But let's see. So this is the top marginal income tax rates. This is the highest tax rate that anybody who is in the top tax bracket would pay throughout the history of our modern income tax. Income tax, by the way, has kind of come and gone throughout history in our country, but it was permanently here. I guess it could always go away, but permanently here after the amendment passed in 1912 you can check Google when income tax amendment passed, to allow or authorize the federal government to permanently create taxation based on somebody's income. That wasn't allowed by the Constitution until that point. It was used for war periods Civil War, for example. But anyway, so 1913, you can see, okay, we have a spike here. Top tax rate, look at this, almost 80%. It dips in the roaring 20s, and then it spikes. This is something to learn. It dips. We have a period of the roaring 20s. Economic recession or depression sets in, and the government has to increase their revenue. They increase income tax rates. A war breaks out in Europe, like Ukraine. Income tax rates go up more. And you peak here in the early 40s, and then it settles down, and you have a long period of here through the 60s and most of the 70s, and kind of peaking into the 80s a bit of 70% is the top marginal income tax rate. So I could talk to you about the plus 90s. Really, only a couple people ever paid this tax rate. Most of them with the last name Rockefeller. But this tax rate here in the 70s, where it settled in at 70%, the top marginal income tax rate, is really an interesting period to look at. So this takes you all through, Kennedy, Johnson, Nixon, Ford, Carter. So both Republican and Democratic presidents, stuck, and Congresses and all that goes with lawmaking in this country, stuck with that 70% income tax bracket. So it wasn't a partisan issue. It was just, that was what it was. And then you had the Reagan Revolution, for better and for worse. And I'm not going to get into where I feel about different policies of his, but it's indisputable that tax rates went down during the Reagan era. You can see here where they bottomed it out, other than the very early area of our country in the mid 80s here, they bottomed out at below 30%, these tax rates. And then they went up, you got through the 90s and went down during the Bush years. Now you can see it kind of getting partisan a little bit. It went up a little during the Obama era and then down. And you can see the Tax Cuts and Jobs Act rates here. And now this is where they'll go up on January 1st, 2026. So we've settled into this kind of between 40 and the 36% rate, 35, 34% rate, those areas for really the past 30 years. So for most people, maybe watching a video on YouTube, although I imagine my age skews higher than the typical YouTuber's age, for most of our lifetimes, we've had pretty low tax environment. Now, what I mentioned earlier is when you make a decision on deferring your taxes, what you're saying is you're making a bet that the taxes you're paying now are lower than the taxes you'd pay in the future. So you're betting on this part of the chart here that is off the screen, that's unknown, it's into the future, that it's going to be lower or the same than it is now. And the problem that kind of compounds here is when IRAs came about, 1974, the law that allowed for the creation of individual retirement, it's not accounts. What is it? Is it assets? It ends with something else. Comment what it ends with, and maybe I'll give you a prize. Okay, so you had 1974 when ERISA passed, and 1975 when the first IRAs were allowed to come into existence. So here is when you started a lot of marketing efforts and research into when it would make sense to contribute to your IRA and save for retirement, when tax rates were up here at 70%, and a bit lower for other income tax brackets, but they're generally all higher than the current ones today. So the idea that you would defer taxation into a lower tax environment came true. It absolutely came true for those people there in those 6 years, the first 6 years of the IRA. But the problem is the advice of deferring into a lower tax environment has withheld all the way through this era, the past 30 some odd years of low tax environment. And now if you are deferring taxes, you're making a bet that your income tax rates are going to be lower than they are now, which is a bet that I personally don't think you're likely to win. You'll win it if rates are actually lower, of course, or if your spending puts you in a lower tax bracket that's also lower, which I also think is a slim margin of victory on both those ends. One, that you'll spend less in retirement, and two, that the income tax bracket, even in a lower one, will be lower than what you're paying today. I think there's very few people who would fall into that winning category of that analysis. But also, which there's probably more of an argument for, of, okay, well, if I can invest a whole dollar pre-tax instead of an after-tax dollar, the compounding will outpace the tax rate growth. And even that, personally, I feel is the wrong bet to make. But that's an opinion, right? So you can have an opinion on that as well. And if you're maybe a financial advisor whose compensation is based on assets under management, regardless of how much will actually end up in your client's pocket versus Uncle Sam's pocket, you're kind of financially incentivized to have people save as much as possible. The future tax world be damned. I can see where my cynical mind comes in a bit on that issue. So, should you defer? I don't know. We talked about it more in the podcast, but this is the history of taxes. What do you think here? Look at where we've been for the past 30 years, and look at where we were for the 30 years before that. Even if we meet halfway, can you imagine a world with a 55% income tax bracket? That seems inconceivable now. But probably, depending on your age, during your lifetime, or definitely during your parents' lifetime, 70% was accepted by both political parties over a couple very distinct political eras. So the chance that we go back there is not zero. It's not even 10%. I would say it's closer to a coin flip than you would want to be comfortable with. Maybe we do, maybe we don't. Economically, I would say we're going to get there. Politically, I don't think the political will to ever get there will ever be present. But at some point, I got to think you have no other choice. But that's, again, just my opinion. So anyway, that's what tax rates have looked like. So in life, all we can do is look backwards, right? All we have is what we've experienced in our own lives. And whether you feel it or not, this is what you've experienced during your working life, this low tax environment. And the future could be here. So if you're planning for a future to be the same, maybe you're right, maybe you're wrong. But if you're wrong, we're more likely to go here than lower. So do with that what you want. Talk to your advisor about the wisdom of maybe something, Roth is a very popular tax solution. I like it. Personally, I'll tell you, I'm saving as much as I can in Roth every year. I don't think there's any chance that I'm going to pay lower taxes when I retire. But that's my opinion. I also like cash value whole life insurance from a mutual company as a tax play. But those are just kind of two of my favorites. So if you want to get a hold of me, you're welcome to. You can find me where, TikTok, Ayers Rock Planning, Twitter, Ayers Rock Plans, Instagram, Ayers Rock Planning. Where else am I? I'm on YouTube, you know that. Ayers Rock Plans, and my podcast, Death and Taxes. That's the only curveball, because I think it's a great name for a podcast, isn't it? Death and Taxes. It's awesome. Anyway, hope you had a good week. We'll see you next Tuesday, bright and early, for the next part of the Income Tax Bootcamp. Other than that, be kind to each other, stay safe. Adios.